Alright guys, ICT is trying to get an audio check here. Can you help me out? Man, I've been talking for the last 30 minutes and you've heard nothing. Good grief. Well, alright, well what this is going to be the example portion of the trading the key market swing points. So I think what's happening is when I change from PowerPoint slides to the charting, it just for whatever reason it just knocks it off. It won't record anymore. So I'm not sure if it's something I can fix on my end or if it's something that's just going to be a limitation. So I'm just going to have to segregate the recordings, and I'll just do the PowerPoint slide as a separate entity, and then I'll bring them together as a recording. So you guys are going to be part of the live session. I'll have to do some editing, obviously, but can you see the chart here? Okay. So you guys didn't hear how to make $10,000 in a week every week? You didn't see that? Oh man, you got to be here when it works. All right. Here is what I was going over. All right. There is a few times in the day where you want to be watching price. And let me get these pivots off because it's going to be a distraction, not only to me, but it'll be a distraction to you as well. You won't be able to focus on what I want you to see. Okay. Who remembers? Who remembers me discussing 10 GMT? Anybody remember me talking about 10 GMT? No, 12 midnight New York time is 5 a.m. GMT, but we're talking about 10 GMT. You're going to learn about this time of the day. Here is midnight, my time right here. Okay. Are the numbers visible? Are they clear to you at the bottom right here? Hmm. Okay, well, this is the 21st of December. Okay. And this is midnight. Now, the way I teach the standard Judas going into London is to use the opening price on the midnight candle. Draw your open out into the day. Okay, and if you're bearish, you're going to be looking for is there any way I can have you guys not post anything unless I lose audio? Because now I'm a little bit afraid that I'm going to lose my train of thought if I keep looking over at you guys. Just can you give me like 25 minutes unbroken without any typing? Unless I lose audio or video, then obviously give me a shout because I'm going to be looking for action on that little chat window to the left. Thank you. I promise I'll hang around and you guys can comment or question, but just give me an opportunity to go through this, please. All right, so here's midnight, and this is the normal time when I hunt a Judas swing or the suspect rally or engineered rally that smart money sells into. All right, and this is I went through the chart scrolling randomly and stopped here when I thought it was recording earlier, but I just worked this area and I spent 30 minutes talking to myself, unfortunately. But this is the Judas swing here. All right. If you cannot find the Judas swing or a price doesn't react yet in your standard kill zone of 7 GMT to 9 GMT, which is 2 a.m. to 4 a.m. New York Standard Time. That's the kill zone I teach for the higher low to form typically in London. What you'll do is you'll scroll your line over to 10 GMT, and we're going to knock it down to a 5-minute chart. I had it on 15 minutes ago. All right, and then you'll just move your line denoting the opening price there, and you'd be looking for price to move above that opening price for the Judas swing. Okay, and you would be selling into that rally, looking for something to get you short, and it could be an optimal trade entry. It could be SMT divergence, which in here could have formed. You could have had USDX smart money divergence in here. You could have obviously a turtle soup in here. Several pivots, higher time frame fibs, confluence of a figure. Um, many different things to get you short here, and you'll see the graphs and slides that which I thought I was showing you, but it didn't record. But we're just going to give you the examples on this recording, and then I'll do the PowerPoint slide and then mash the two together in a recording and post it up there on Baby Pips that way. But this is the Judas. Okay, by watching the 10 GMT time, you'll be able to see that price swing that sucks in the public that didn't have enough volume for their liking in the standard London open time frame. 10 GMT will give it to you by doing it like this. Okay, and I don't want to go closer to Christmas by going to the right. When I was Before I started the recording here, I was asking someone to call out a month, so that way it wouldn't look like I was just cherry picking examples. So I'm going to ask you now, the first person that gives me a month, that's the month we'll use. And right now we're just using the fiber, so just call out a month. All right, I'll go with September. January, wait, that's a little. I'll have to go through some scrolling to get there. Let's go September. That's pretty good. All right, and what I want to show you is by looking at the market like this, you can have some forgiveness on the part of London Open trading. And oh, I went past it. Okay, here's September 1st here. By having this concept, it'll help you trade the intraday price swings. You've already learned the London close. You've already learned the New York Open. Obviously, you know the London Open now, and you know the Asian parameters I use for trading. But the one I've been sitting on and keeping to myself is the 10 GMT time frame. And it sets up just like a standard Judas swing, and it's meant to offset price going into New York. Okay, and many times it sets up the New York Open optimal trade entry that gets you in sync with the high or low that was made in London, or even the Asian session if it made the high or low there. Okay, so it's very cool. It's neat. You just want to make sure you have it in your toolbox. Does it always manifest? No. Much like everything else I have, it's nothing. It's not perfect. It just gives you one more tool to use and look for in terms of price action. All right, here is the New York candle, and the opening price is here. Okay, and the Judas is up here, running higher. And I'm going to avoid going back and forth between cable prices and charts showing SMT divergence. I just know them because I trade these pairs. Um, you can test my knowledge in remembering it just by going back over the examples, and you'll see if I know what I'm talking about or not. But you want to look for S&T divergency in here. You want to see fibs and higher time frame support and resistance levels. That's what this is reaching for. Okay, it's just not going up there for any old reason. Okay, they're taking price up there to establish new shorts, and they have to drive it up there high enough to get the street money excited to, to participate in that, and they'll chase it. Okay, just like a dog chasing a car, they'll just run after it. They don't know what they're going to do when they catch it, but they just want to go after it. So that's why they send it up there like that. It makes it very interesting for neophyte traders. So that's the candle that you understand with the London Open. Here is the 10 o'clock GMT candle. Okay, we've already fulfilled the Judas, and now we're coming out of it. So this day, it doesn't have any bearing whatsoever. Okay, here is the 10 o'clock candle. Again, we're coming out of a larger term optimal trade entry and in an existing strong down move, so you had no indication or bearing on this one here. Okay. Actually, I'm looking at an hourly chart. I should be much smaller time frame. Let me show you. September 9th. There's that rally up and optimal trade entry in here. I was just disclosing. And then price runs up. This is an ugly period of price action. Okay, here we go. Here's the 10 o'clock, 10 GMT. Okay, and the opening price on that candle is here. So let's draw that out a little bit so you can see what I'm referring to. And it's right there. All right. Now, what they're doing is price is pulling up away from that. Okay, and what that'll do is folks will see that and they'll say, "Wow, look, we probably made a low." And this could be optimal trade entry. It could be all kinds of things, making traders think it's going to go up, and we made a low. And the Judas is just basically leading them into the slaughterhouse, and then they kill them. They have rapid repricing to the other side of that opening price, so now they're trapped. Okay, and we were talking about this yesterday in a casual setting. We were just talking about different things openly, and I mentioned how when price takes the other side of a known level, which is this known level here, this is a key swing point in the 24-hour day on Forex trading. If you have obviously a bearish move in here and they start having a retracement in here, when they take price up and then do a rapid repricing, that's killing anybody that was trying to catch the falling daggers or trying to buy the low in a bear move. I don't ever try to do that. Okay, I have tried to do that, but I don't try to do that anymore because it's very painful. It's too difficult and it's too hard to be consistent with it. I can anticipate when it will likely occur, and I would like to see it happen, and then make a very strong technical reason that it has reversed, and then I'll go in there and start buying it. But I don't try to catch the very low. And when I was early in my career, I tried to be very egotistical, and there was a few times I got very close to a lower high, but it wasn't enough for me to be able to beat my chest about it. But I wanted that trophy. I wanted to be the guy that was able to figure it out, and I'm not that guy. So this is the Judas swing though that materializes much like we see at the midnight. That's typically in the London Open setting, and you can see how it led them to slaughter here. We're going to go and scroll forward. We're going into Here is the midnight candle, New York time, in here. No real Judas in here, but we did come out of a run below this low and a pretty aggressive repricing. And then going to the 10 GMT candle here, we have the market structure is bullish, and the opening price on that candle is here. So the Judas is pulling away from that opening price, sucking everyone in, thinking it's made its high. So when it pulls back down, it's pulling back down into a level of new buying. In other words, they're going to allow pairing of orders between uh, bears and weak bulls to establish new longs. And notice how it also is a fake out on anyone that would have been trying to pull back from this. Even turtle soups are sometimes wrong, and this is an indication of where it was, just so that. Okay, so this is the Judas, the move down. Okay, think like um, the Power 3. Okay, that module talks about how to get the higher low of the day when we're bullish. The Judas swing gives you the low when it drops down. It's trading down into the low of the day. Well, we already have an established price move. Okay, we already have an established price move. This move down, okay, is setting up the New York Open move. Okay, and many times this will retrace a little bit farther or prolong it to around the 7 o'clock in the morning New York time or 12 GMT time, and that's when you get these really pretty optimal trade entries, and it just goes. Okay, but that's just on this candle here, giving you the sucker play, and the public would have been selling into that, and all of a sudden they reprice it and then send it up here and making it the high of the day. Going forward, now by combining this with your other kill zones, here's your standard midnight candle. Okay, SMT divergence, turtle soup. Um, I'm not going to pull up the pivots or anything else, but this is um, the opening price. Let's put that on here. If you haven't really gone through your charts since I've recorded and released the most recent videos and how to use this application on price action, if you haven't done that, I suggest that you start doing it and spend a good weekend coming up when we go into Saturday and Sunday this weekend coming up. Sit down with your charts and go over any one pair that you trade a lot and look at price action around the kill zones. Look at price action going into London Open. London Open always has a huge um, odds that there's going to be a Judas there, because that's the time of the day where there's a rapid rush to to run stops to get people excited to go in one way, and they reverse it and then send it the other direction. That's really why the higher low typically forms between 2 o'clock and 4 o'clock in the morning, because that's that characteristic of that session. Just like each individual commodity or currency pair has its own characteristics, each kill zone has its own characteristics, and they're not limited to that, obviously. But since uh, Forex Mentor put out their version of trading the London close session, um, that session's always been actively traded for day traders and S&P traders. At 11 o'clock, that's your time to go counter trend, get a reversal there, or wait for the consolidation through lunch, and then whatever that move was that was in the morning, you can plus it up and do swing projections for the PM trend that starts around 1:30, 2 o'clock in the afternoon, and then trading into the close. Well, that's one characteristic that's very strong. Its characteristic is it has a pullback, a retracement, but doesn't always unfold like that. And I wish that course would have mentioned that, but I think, it was more or less trying to teach individuals to focus on one aspect of trading that session. But it's also a very good trend following entry point if you understand how to use it. And you've seen that in my version of it, but we'll build more on all that stuff as we go out through this year live, because there's a lot of things I didn't share because I just didn't get enough examples of it, price action recently, to do it without going through years and years of data, and I didn't want to go through that. It's been taking me this long putting this together. I don't want to go through even more. So anyway, we're on a rabbit trail. The midnight candle here, that's the Judas that moves above that opening price. And remember, don't don't look at it as this is the Judas. Okay, if you don't have the higher time frame or the premise going into the day, this will fake you out. This will screw you up. Okay, you're looking for a high to form. Okay, we've already moved up higher. We have this level of resistance been poked through. We drifted off. Okay, and they ran it up above that opening price of the midnight candle. That's the Judas right here. That small little move right here, that's all it needs. Why did it go up there? SMT divergence, stops, and immediately a rapid repricing on the other side of the opening. Okay, that's the trap move. So now traders that were going long here, they're going to hold on to it here with probably with the expectation saying, okay, well, if it goes below here, I'll probably be wrong. And that's where the stops will be, or they'll be below this low here. Okay, and once they get them trapped, it'll just drop it down and then slam it. See how that huge candle happens? It's not that huge, but in terms of the recent candles, this is the run through the stops. And now if they didn't have a stop loss here, they're wishing they did, because now they're going to drop even lower, take these stops out, and they run the trend going into what time frame? What time of day is this? Can you guys make it out on your chart, or the chart I'm showing? No, this is actually London Open. New York is over here. So the Judas is taking you in to a short here, okay, here, and they slam it down. By using this candle at midnight, you can catch that. Then you have the reversal formation. 10 o'clock GMT is right there. No insight at all whatsoever gleaned from this day with it. But you do have where's the opening at? The opening is here, and price has already come off of London Open and then took it above the initial high here. And then we had some ugly trading, but still pushing it higher up. Going forward to the next day, I keep these levels where I borrow them. Here's midnight, New York time. The opening on that candle is right here. Right here. Trades down, S&T divergence. Let's pull up some pivots. Where are we at based on pivot zones? If we're going to be looking at a pivot zone trade, what are we looking at? Is that buy or sell zone? Buy zone, yes, buy zone. Okay, so this is the midnight candle. Trading down, this is the Judas. Okay, I'm using on this example, this is the GMT pivots at New York midnight time. you want to recalibrate and use New York pivots. One or the other will be respected, and you just got to toggle back and forth for the first couple hours after midnight to see which one they're going to be respecting. This one here shows MS1, where it trades down to MS1 here, and I'll show you that real quick because here's the midpoint or mid pivot here. Okay, it trades down to it. All right, and then going to 10 GMT, 10 GMT here. Not much really to glean from. Didn't really give you anything. It's a short-term high, and then continue trading where it wanted to trade. I'm going to give two more examples with the 10 GMT, and then we're going to use two other times of the day where I also look for a Judas. But the point was, and I have to make sure I remember, because I did a lot of talking in the first portion where I thought I was recording and never was. The Judas swing will always form once in every 24-hour trading session. All right, it'll form one time, at least once. Now, we're not going to be in front of our computers trading every session. I know I don't trade every session, but if you have access to a particular trading session and you trade, like for instance, obviously the London Open, that's the one I trade more than any. It has the most potential in terms of pips. But if you look at a particular session like London Close or New York Open, Asia, or London Open, you can have a Judas form, at least once or twice in 1 week. And I've taught for a new trader, if you have a small expectation going in the marketplace, you can get 20, 30, 50 pips in a week just looking for one setup in one trading session. And that's when I gave you an example or homework to look for one setup for the week. That's what I wanted you to hone in on. I gave you enough tools to do that, okay, and I wanted you to see 1 month of doing that, 4 weeks, and see what you haul in for the whole month and how much work you had to do it. It's very little work. The hard part is the patience to wait for that very thing to happen, and that's where the weakness is. I think in 90% of traders, just the patience factor. So while it doesn't show you a setup every time at 10 GMT, I'm just giving you the times when London Open doesn't really pan out for you, or if you missed London Open's high or low, this many times will give you an opportunity to get in sync with it, using it as another uh, crosshairs portion of the day where you can look for another Judas where they retrace against the prevailing trend of the day, and we're getting ready to see one now. And you just wait for it to unfold. Um, Remember that 10 GMT many times will set up the New York session trade. Okay, it'll be the Judas swing, which you see here, and many times it'll dip back into the optimal trade entry, which is here, sweet spot right here, London Open time frame. I'm sorry, New York Open time frame rather. So make sure I said that right. Many times the 10 GMT candle and the Judas that unfolds will set up the New York Open swing or trade, and many times it will drop it back into the optimal trade entry. So it allows you some visibility and not think that this is the high of the day now. Let's get short and hold on to it, and then hopefully it'll run down here. Okay, don't think like that. You have to have your bias in mind, but also be able to map out your day based on market profiles. Where are we at? Are we coming off of a significant swing high or low on the daily chart, 4-hour chart? Everything has to coalesce, but you only need three things. You need a premise, okay, or three things. You need a premise, okay, or a bias. And you folks are really trying to make it harder than it has to be, and it's simply because you're trying to trade every day, okay? You're going to have to concede and realize that there are going to be days where you just don't want to be trading. And guess what? Those days might still have a trade that you missed out on, and you're going to have to deal with that. You can't be in here every single day expecting to win every single day. I don't do that. The guys I know that's been doing it longer than me don't do that. Okay? They look for a setup. They know what they're looking for. If they don't have it, they don't trade. It's that simple. Okay? They don't get in there and say, well, I got 12 different patterns I trade, and not one of those patterns are existing, so I'm going to create one today, and I'm going to go in here and buy it. That's not what they do. Okay? So having that understanding that you have to have a premise or bias for the day, and are you a bull or bear, or are you sitting? That's it. So you're a chicken, you're not taking any action. You're a bull, you're looking for a buy, or you're a bear and you're looking for a sell. It's simple, and there's nothing wrong with being a chicken. If you don't know what's going on in the marketplace, sit on the sidelines. That's a trade, and it wins every single time. You can't lose money in that. Okay, so you start your analysis for the day with your premise. Are you bull or bear or chicken? All right, there's nothing wrong with a chicken. If you determine that you're looking for a bull or a buy pattern, okay, many times these tools will keep you out of taking really poor trades. And the times that it does get you in a trade that's wrong, that's when your money management comes in. That's when your risk control comes in. Okay, so that's your shield. That's your only really defense. Because you're going to make a mistake, you're going to have your bias wrong. You're going to be rushed to get in there and see something, and you're going to second guess your analysis because you're new. Okay, or you're rushed to get in there and do 12 trades because the guy in the forums did 12 trades and he's made 90 pips today. You don't even know if this guy's even made those trades. Okay, so don't believe all that stuff. Stick to a plan, have a approach to doing it. Okay, and you'll see that these kill zones and the things I'm sharing with you will highlight really nice setups if you can just sit on your hands and wait for it. Okay, sorry. So obviously prices gave you the New York Open optimal trade entry in here. Going forward, all right, this candle is the midnight candle, and then you have the Judas runs up higher into optimal trade entry, sells off, and gives you another smaller short-term optimal trade entry in here. So you're looking for shorts. And 10 GMT is right there. Okay. So here's the day. Okay, we come off the highs, traded down. We went into a consolidation. Okay, we went a little bit sideways. 10 o'clock GMT. All right, the Judas is here. Here's the opening. There's the opening price on that candle. So you're going to be looking for price to move up away from that because if the bias is bearish, okay, you're going to be looking for a move up away from the opening price. Okay, and it's going to go up to where? It's going to go up to an optimal trade entry. It's going to go up to an SMT divergence. It's going to run out stops right in here. See, this is what it would look like at the time. You'll see your chart like that. Okay, and as price moves forward, each new candle as it trades, you don't care about this action right here. If you haven't placed any trades yet, you're waiting. You want to see them run stops. Now, if you chase price right here and you go short, you get caught in this, okay, that you might think this is an optimal trade entry buy from low to high, and then trading down here, giving you a buy, and then hopefully it's going to run up higher. Don't that I'm trying to give you things to keep you from chasing price, and this is one of those uh, points of the day where it gives you more confidence trade off of what London's already posted, or hopefully what will unfold in New York Open. So it's kind of like a midpoint kill zone. Price goes up above this high, blows out those stops that would have been resting on any trailing right here, gone, toasted. They're no longer there. Okay. Turtle soup, if you want to look at it like that, also. So there's a turtle soup sell. All right. And so you can use turtle soups to get in sync with the daily trend. And then you catch this move here. Trades right down into this candle here is 10 minutes after 7 New York time. Okay. And trades down into another SMT divergence. Lower low here I'm seeing in the fiber. And then trades right back up and blows out the stops again. Okay. And then now we're in a mess. So we'll go into a Z day. So you can see how you can eke out just in this small little move here. Let's assume we were selling at the stop and not getting the very, very low. We're going to get out here. Okay, there's 57, so roughly call it 50 pips. So there's one way of using this 10 GMT time frame, looking at a Judas in sync with the higher time frame premise or the daily trend, and combining it with the things you've already been learning, and you can nail down some pretty neat little trades. And then unwatched portion of the day, really. I mean, there's not a lot of people really paying too much attention to this time frame, but it's just a pattern that unfolds a lot, and it's just there to take advantage of. Is it going to give you a trade all the time? No, but if you happen to be available at the time and you see these things unfolding, obviously it's beneficial. I'm looking for 10 GMT right there. The candle open is here. The trend on the day is bearish. Say the SMT, I'm sorry, the Judas pulling up above. You want to be getting short away from this opening. Okay, when we're above this opening price, that's where the short will form. It could have went a little bit higher, okay, but it didn't need to because we had 62 here, all coalescing with the same premise in mind that the price was retracing up into another optimal trade entry, and then price went down. So getting in this area here, we're going to give you the worst case scenario fill. You got down here, and you didn't get out to the low. You got down here, consolidation area here. There's 60 pips. Okay, using this little concept to look for a Judas at 10 GMT. Now, we talked about this one enough. I think that you can go through your own chart examples and find where it would have helped you and where it wouldn't have helped you. It's just one more tool to have in your toolbox. But there is other ways to use this time frame. But I just wanted to use this opportunity to go over how to use it with the Judas and the little fake out move, more or less, that it causes in the marketplace to get people sucked in. Notice how many times it's just really giving you an opportunity to get in sync with the prevailing trend of the day. And that is very clearly seen with the midnight Judas that I'm most known for, and that is getting a sell. Getting a sell above the opening price here. Here's the opening price. We don't care about price being below it here. We're looking for the move above it. And when traders talk about you want to sell rallies and buy dips, this is my way of answering what that means, and that was one of things I struggled with as a new trader, and understanding what the daily range, the anatomy of a daily range. And on down days, the best thing to do is get short on anything above the opening price. If you look at your candles and I'm sorry, you look at your daily charts, you know, it's a gold mine. I mean, that's where all the money's made. And by using that Judas, it helps you get up there and find it. And then here's your optimal trade entry on the north side of that opening price, and then there's your move. And the 10 GMT giving you another opportunity to get in sync with it, and then you catch the remaining portion of the day. All right, so we talked about this time enough, I think. Let's look at examples of where it unfolds in different portions of the day, like the London close. All right, we're going to look at 1500 GMT. There we go. 1500 GMT. The opening on that candle is here. Okay. No real indications on this one here because it's already moved so rapidly away from the low that formed here. The only other one would have been the 1800 GMT, but I don't use anything beyond that because I don't like trading after 1800 GMT. If you've been following any of my work, it's to me it like kind of ends the day in terms of volatility, unless it's really news driven or something comes out, newsworthy that moves the market. Then obviously you'll see all kinds of wild stuff happen. But on the most part, 1800 GMT is that's when the battery's dead. Let's look at London close on this day. Now, 1500 GMT is my beginning of the London close, and it goes as far as 1700 GMT. The opening price here, very small move, but really just pulled up into a larger optimal trade entry. Okay, and then you get your classic, what is understood and made famous as a reason because of Forex Mentor, the typical counter trend trade, and then you see it fall off. The formation actually occurs at any major kill zone. You can look at the 7 o'clock in the morning, which would be 12 GMT, and wait for a Judas to unfold in that kill zone. And many times you'll be able to catch the very high or low for that very particular session. Okay, we're sticking to London close. Okay, here's 1500 GMT. Didn't get below the opening of this candle, but it did give a little bit of a pullback to get you in sync with the trend, and then it finally blew up over to 1800 GMT, calling the very high, then plummet. Again, the point is not to show an example of every day of it forming. It just gives you an opportunity to find something if you haven't caught anything in London Open or Asia or New York Open. If you look at London close with this concept, you might be able to ferret out something to eke out your minimum daily objective based on the spreadsheet I was showing, or sharing rather. And by doing that, it helps you fill in that gap, like in low volatility time, or if we're late on a Friday. We've already moved out of London Open on Friday. You don't have very much daily range left. By looking at the market like this, you might be able to catch that last portion. Now, I'm not trying to encourage that you trade a lot or force that weekly objective. I just more or less want to give you more tools. I mean, there's nothing wrong with having more tools. Just you have to control how often you use them and use them at the right time. Here's the London close 1500, and the opening is here. Price pulls down away from the opening into an optimal trade entry here. So all we're doing is using it to get in sync and not get caught up in thinking that this is the high and it's going to continue trading lower. It helps you put things in perspective and not lose sight of what price is more apt to do, not just looking at what happened in the last 10 minutes and thinking that that's enough to build a trade ideal on. We'll go one more with the London close, and I think we've seen enough. Okay, here is a Judas that occurs on this kill zone. The opening price is here. Okay, price trades away from it. Okay, into a higher time frame optimal trade entry around the very deep 79% retracement level, but still the Judas pulling away from that, and then down it goes. Getting participation in that move would be not the high and not the low. It's around 60 pips. So there's nothing wrong with that. And like I said, we've pretty much seen enough on that. Now this is one more way that when I'm really looking for a fill for my weekly goals, I use the Judas to confirm an existing setup that I may already be looking for. Or if I'm looking for that 20, 25 pip scalp, to me that's a scalp. 20, 30 pips, that's a scalp for me. It may not be for you, but that's how I deem it. I'll use these approaches to go in and ferret out those moves. It will not always form. It will not always be profitable, but that's how I use it. And you can look at your kill zones. Go back over the notes that I've provided for New York Open and the London Close and London Open, even in Asia, and you'll see how Judas swings can form in those sessions. But here's the most important that I really want you to understand by sharing this module with you is if a Judas swing forms, okay, and it trades below a previous short-term high or low and quickly changes direction and you're in that trade, that gives you the confidence to stay in it and not just take 10 pips. That's what I'm more or less trying to get you away from. Don't think like that. You need to have a little bit more of a range that you're trading within to be consistently profitable and weather the losses you're going to have eventually, because you're all going to have them. I have them, and you can't avoid it. All right, so let's close today with a recap of what happened today. And here is today. This is the fiber. Pull up a 5-minute chart just so we can show the entire day's range. Okay. We had the Asian range. All right, I'm using 0 GMT to 5 GMT, and what that's measuring is 7 p.m. Eastern Time to midnight Eastern Time, local New York time for me. And here is that Asian range in here. And And let me get these pivots off. Okay, here's the Asian range in here. And uh, dealers took price above, got people excited about maybe getting long, and then slammed it down. This is the Judas, and this is the midnight candle. Okay, and you would have been looking for longs, and I'll tell you why in a second. Here's the opening price here. So we're not interested in any of this. Now, if you're a scalper, okay, and you're aggressively taking action, let me recap this. The Asian range that I use for my trading is 0 GMT to 5 GMT. I'm only looking up to midnight New York Standard Time, or 5 GMT. Asia still is trading beyond that. Okay, I'm not saying that it stopped trading, but the range of price action I'm focusing on is between 7 o'clock and midnight New York time. I'm using those levels as uh, reference points of where stops would be placed by the street money. And they use this range. Okay, there's a lot of traders that trade this breakout pattern, and they'll put sell orders below this level, and they'll put buy orders above this. And just like the turtle soup is profitable by capitalizing on that premise that traders will be having buy stops above previous highs here. Well, that's what they're doing. They're filling those orders here, allowing pairing of orders, and then they aggressively reprice it below the Asian range. And this is the setup you wait for. Okay, you don't get excited and buy here. Okay, because you're above the opening price. If you're bullish and you're going to catch hopefully a big large range day, which we didn't have that today, but we still were profitable with the premise going into the day, and I'm going to build on that now. But the opening price here, while price was above it, okay, you could be aggressive, okay, and if you're very nimble, you could sell into this looking for a price move or Judas swing below the opening price. Okay, I do not trade like that. I don't. Um, I've gotten burned a couple times trying to be, that aggressive, and I just sat back and said, you know what, I'm just going to wait for the real move, and the stops would have been all underneath these Asian range lows, and this bull flag, which would have looked very handsome at the time. A lot of traders would have saw that and said, "Wow, we got a lot of continuation likely." But keep eye, keep your eye on that opening price, because that's the pivot zone for the daily range. The smart money wants to be long below that opening price. If it's a big range day, look at your candles, man. Go on your daily chart and see where the opening price is on large range days that close on their highs. The opening is very close to the very low of that candle. So my emphasis has always been trying to get long at or very close to the opening, and more or less below it, because that's the sweetest entry point in any large range day that trades on high end and closes high. The best portion of entry is always at the open or very just beneath it. Okay, so that's why I trade the way I trade. Going forward, price action would look like this. Okay, right in here, let's pull up some tools and see if they gave you any insight. I'm going to start with GMT. Okay, didn't get it, didn't get right to the pivot, but we always use a 15 pip buffer for uh, confluence of support and resistance. Okay, we have the 127.50 mid fig in here at the central pivot, at a time frame when we would be looking for a buy, and again, I'll come back to that in a minute and why I was expecting a bullish move. The price had gone below the opening price at the midnight candle. Okay, this is a new day for me. And then price had snapped up and then went back above the highs formed initially here. Traded back down into the range. What time of day is this? Right here. What is this? New York Open. Exactly, New York Open. So now you run your fib from the high that was formed here and the London Open low. Here's your 79% retracement level. Here is your 62% retracement level. Okay, we believe that we've already formed the low of the day here. So if price trades down into that sweet spot or 62% level, 62% retracement level, this is your entry point for New York Open, and you aim for the old high. Take some portion off of the trade and let it run remaining portion. But look, it trades right up to R1 and then folds back down. Now at this point right here, this is when everything changes, and now you have a very high probability that we're in a Z day or potentially could see some softness going in. But we're kind of late in the day. It's 1500 GMT. Most of the candle for the daily range is already put in place. More or less its battery life is gone. It's used. So we had a Z day. We didn't have much price above the open, and we didn't have much price going below it. Okay, but you could have used this day here to get long and catch 50, 60 pips. Okay, and we essentially started going sideways. And for the majority of the day, look where we hung around. We worked at opening price. Now, the Z day and seek and destroy day, they always typically will start off like a very good profitable day. And that means that the London Open trade will most of the time pay you, but it won't give you that huge range. Okay, this gets back to the premise of why I tell you to take something off at 20, 30 pips, whether it be your split of 30% and 70% or 50-50 with double tap, or taking off 70 and letting 30% trail. You have to take something because you don't know when these days are going to come in and really chew you up. Because if you're in this and it starts consolidating and working the opening price or equilibrium point, just stop trading. Especially if you made money, just get out of the market and just be done with it. Okay. Now we had the Z day formation in here, and then finally going into new day, we broke down some in here, and we took out the London Open low. Why was I expecting a bullish day? Let's pull up a daily. And let's zoom in. Okay. Here's where we're trading now. This was price action yesterday. Okay. And here is the reason why I was looking for a bullish move. Let's get all this off. We are still in a sell program overall on the daily. But when we have a fractal low or swing low form, I will always anticipate at least a chance to have a bullish move up. Okay, even in downtrends, you'll have these days where it gives you these real sharp, nice little kind of like this day in here. Okay, you only need one of those, even in a bear move, and you can still be profitable being a short-term day trading bull in a bear market. Um, Yesterday was here, the day before this day. That candle is when we formed the swing low. Okay, if you go back to the Power 3 module, I tell you that I trade on this day. Okay, in other words, I'm looking at as soon as my candle begins on a new day, and if I have this formation on the daily chart, okay, I'm gonna I'm gonna try to see if I can get some kind of momentum on the upside if I trade below the opening price on the very next day. And once we start trading a new day, there, when I get that opening price, I'm gonna be looking for something to get long on. Okay, and it did give you a little bit of profit potential, but not much. And I was expecting, honestly, price to see it go up to this old low here. And if that took out that low, then obviously that changes a lot of things on the short term. And it doesn't mean that the low is actually formed on the daily chart. It just means that it was something to trade, and it offered up 50 to 60 pips today. Even though it eventually went into consolidation and a Z day, you know, 50, 60 pips, it's still 50, 60 pips. So that's the reason why. It's right out of the Power 3 module. As soon as I get that swing low on a daily chart, I watch the next candle. If we open and then trade down below the open, I'm looking to get long in there and hopefully, catch a large range day up. I was hoping to see something like this form. See this candle here? I wanted to see that type of formation or this formation right here. Okay, and here's a nice example. Here we had, even in a bear market, it's bearish. We had a low form right here. I'm going to trade on this day, right here, this day. The swing low on the daily chart, there's my day I'm going to be buying. Okay, and that was a Friday. Here's Sunday, and then Monday, and we could have caught a bullish day here in a bear market. Okay, I'll give you another example. If you look at the swing low here, okay, I would have been buying on this day. Okay, even though we closed this a little bit above the opening, look at the range just for that day. From the opening price was around 133.09. The low was 132.72. So if you were buying the 132.80 institutional level, its high was 133.96, well over 110 pips, 118 pips, and it still was, a flat close based on the open. But that is a nice range. I mean, you can make some profits doing that. The very next day, doing the same thing based on the fact that we have a swing low in the daily chart. Okay, this is what I'm talking about, being profitable, still being wrong. If you expect price to go up and close on the high and it doesn't, but still gives you the range, remember, you're taking profits as it goes up here. Okay, so this day here, if it opened up at 133.14, the low was at 132.85. Okay, so if you're buying, heck, let's just say you bought the figure 133, the high was at 134.37. So you could have made a 130 some pips. Let's just be fair and say 100 pips. That's in one day buying in a sell program. Okay. Here's an example. You have the low with a higher low here, higher low here. I'm going to trade on the next day. That's this one right here. Okay. That's it right there. And the same thing happens on the sell side. Okay. When you're in sync with the buy or sell program, here is a high in here. The open trades a little bit above it. Nice down day, closes on a low. Open, high, makes the high of the day, trades down, closes low for the day. Here's an example here where you would have had the swing high, lower high here, Lower high here, even if it is a Sunday, it doesn't matter. If you use the Monday, even it's still the same thing. I will be trading on this day on Monday. I would be shorting in this move up above the opening price, and then it closed lower. The scenario here, we have a higher high here, lower high on both sides. Here's the swing high. Here's Sunday's trading. Okay, looking for something short around the opening. Okay, we trade into Monday. Monday's action just a little bit above the opening price, and the difference is the opening is at 133.69 and the high is at 133.77. So it's not even, you know, it's not even 10 pips, but you're still looking for that move to get above it. And if you don't see much movement above it, that's when, and I do it very, very, very little, that's when I would sell on a stop. So if I miss anything going up on a limit, if I knew I missed it, then I'll put something underneath the market to sell into weakness. But I don't do that. I'm more enter on limit orders, um, or if I'm right in front of the chart, I'll market it, go right into market. But many times it's limit orders. 17:30 GMT ish, 1:30 Eastern. Fast move that happens so often. Well, 1:30 p.m. Um, Earlier in the recording, I was talking about how, as the North American traders, when we trade equities and the index markets and the futures markets, North America, what time do these guys, and me included, when do we eat lunch? You're asking why there's a wiggle that happens around 1:30 Eastern time. It's between 12 and 1 o'clock. Okay, so it gives the guys, you got to come back from lunch. Okay, they sit down at their terminals or they go back out to the pits and they'll get a feel for what has happened. Are we going to continue the trend that was made in the morning, or are we going to reverse and go lower into the close and retrace everything that was put in the morning? Okay, there's two trends in the day in stock market and in indices. There's a morning trend that is from the stock market open or bond open or currency open to around 11 o'clock in the morning. And then it goes sideways and consolidates, goes through the New York lunch period. Then around 1 o'clock, 1:30, 2 o'clock, things start heating up to fulfill the remaining portion of the daily range, and that's the PM trend. Okay, I learned that concept from George Engel when I studied his LSS Spyglass program, and a lot of my S&P trading came right from his work. And he talks a lot about those time of day theory and how there's a morning trend and an afternoon trend. And the reason why you see that 1:30 Eastern time is because all the New York traders are coming back from lunch and they're getting busy again for the remaining portion of the day. So because the equity markets have an influence on currencies and it starts to thin out during the afternoon, um, that thin liquidity and added push in equity markets can cause that fluctuation. That's what you're saying. Did I satisfy your question or not answer it well enough? No problem. All right, so now where are we at today? Okay, if we're looking at the daily chart, um, it looks like it wants to break down farther and continue its sell program. And if you look at how I view the weekly range, um, we could have very well made the high of the week on Tuesday, and we're trading in Wednesday's action now, but it's a little uncertain as where I think it's going to go. I mean, we got a couple more hours, and then London will be open. But looking at price now, where we're at, I know that's probably what you're all chomping at the bit. What's he think about right now? um, Honestly, I have to tell you, I just don't have enough to go by. But looking at what we've covered tonight, okay, here's the midnight candle. Um, if we rally up from here, okay, if we rally in here, and let's see if there's anything in our pivots. And again, for disclosure's sake, I'm still not taking any action. I'm sidelined. All right. If we trade higher, maybe up into the central pivot, which would take us back up into the lower portion of this consolidation, and we maintain this short-term low we have here. Let's look at our swings. We have the 50% retracement level converging. We have a lower magnitude swing here, which converges with optimal trade entry. And again, this is assuming this low doesn't get taken out. So right now it's an assumption. And this is how I do the analysis as we start at midnight. I sit down, I start pulling the fibs, I start looking at pivots. If there's any confluence, I'm looking for mid figures, full figures. Is there anything that would line up? And me personally, if we start rallying up from this candle here, I'm going to view that as a Judas to get short. Okay. Um, if we trade off of it and go lower, which is very probable because there's a lot of stops resting below these lows over here, that would be enough reason for it to drop down into S1. Notice how S1 has, let's put a line on it, you can see it. Here's S1 over here, and you can see that essentially is that same area of lows. So that to me is a suspect area for a potential raid on stops, and it could go down and take those stops out and then run back up and go to the central pivot there, and that may be a 10 GMT signal that may form there, or it may happen right at London Open. I don't know that. Um, so really, I just spend the midnight hour or 12:30 to 1 o'clock in the morning when I get up and check my data. I look for potential scenarios to unfold, and I think like I'd show you those templates. How are we most likely going to trade today? And is price action modeling any of those templates? If it's not modeling any one of those, I just sit on my hands and wait to the next trading session, or I'll wait an hour or so into London Open, because usually I'll babysit that session more than any other session, because there's so much potential to catch the daily range, high or low at that time of day. And obviously, if I don't see anything by 3 o'clock or 3:30 that's really got my attention, I'll just go to bed and set the alarm for 6 o'clock or so and get up and see if there's anything that I can use for uh, the New York Open, and that's using what we talked about tonight, the 10 GMT, and hopefully see something that will give me an opportunity to get in sync with something that either unfolded in London Open that I maybe have missed, or Asia that maybe I had missed, or line up something that I'm going to actively participate in for New York Open. So there's a whole lot of scenarios, and this is one of the things that makes trading so difficult, but it's still easy. Trading is easy, but what makes it difficult is when to apply all the things that are available to us as traders. And there's just no way for me to make it so perfectly clear outside of what I've already done. And that's why it takes a lot of time and wait for the scenarios that we can see what makes sense. I mean, you guys knew that the New York candle at 12 o'clock, when you see price trading up, and we're in an area where we've made a daily swing low. I've told you that in advance. You've seen that on the Power 3 video. You've seen it on the short-term trading module. That's how I trade. I tell you, when I see that daily swing low form, the very next day, the fourth candle, I'm in there looking for the low to form underneath that opening price, and I'm going to buy it. And today was an example of doing that. And it traded up until we made SMT divergence up in here, and that was the indication. That's why I tweeted. If you look at the time when I tweeted, I said it's an easy 50, 60 pips. Um, that was the end of the run, and we've since then traded off softer. But in here right now, there's just nothing for me to go on. It's still way too early, but I would be looking for a short if we trade up into the central pivot from this candle. From this candle, um, if we trade down to S1 and a little bit lower to take out these stops, then I think the move will ensue where we trade up higher to give a Judas, maybe go up to central pivot and then sell off. But obviously, if we trade um, much higher than the central pivot, I think we maybe have priced in a significant short-term low on a daily chart, and we may be reaching for those higher, the higher low that I was talking about, that I was anticipating seeing today. And let's see if I can pull that up real quick and show you. I was doing this live yesterday. I was posting some, well, actually not yesterday, the day before yesterday, and there was a few levels I had noted. And let me see if I can put them on now. And that was you guys that were in the room with me live, you remember these. I noted this, and I noted the 127 level and this high in here also. And I suspected should price pull higher, it would have reached for these levels in here, and it went to everyone except for that one. And I would have been looking for this breakdown, but it unfolded at a different time, not when I was sitting in front of the charts. So anyway, that's what I'm looking at for now. We obviously have a very nice um, magnitude price swing here of about 150 pips. So if we see price pullback, we're right now still in we're at the 50, a little bit below the 50 mark. We haven't really got down to 60 yet, but these lows I think are suspect. They could very easily be taken out because we pulled way deep from this swing here to this high. So to me, it just makes perfect sense that they're going to try to sweep it underneath here. Now, do we have momentum to carry it much further below that? I don't know. You know, just it's too early for me to be able to indicate that now. But certainly could be a retest of the 127 figure, and there'd be a lot of interest for the bulls to get long in that price level, and then maybe even see some bounce. But if we get below 127, I think that she's going to go lower. So I have to see where we're at when we get to these time zones that we monitor price action in the kill zones, London Open, and now what you've learned tonight, 10 GMT, and in New York Open. Based on where prices traded there, then obviously I have much more insight. But right now it's just at midnight. It's not telling me much. I will stay with the buy signals as long as the short-term low on the daily chart is still in place. But I still am cognizant of the fact that we're in a sell program on the daily chart. So I'm very aggressive in taking profits if I'm buying in a bear uh, sell program, because you don't see those far extensions unfold because you're against the prevailing trend or higher time frame. So you just got to be more aggressive. But if you want to be a very low risk, high reward trader and really develop patience, only look for sell signals, and by doing that, you'll gain a lot of insight to you as a trader. You'll learn a lot about yourself that you didn't know, and some of it will be painful. You'll realize how weak you are as a new trader and where your areas of improvement need to be, and it just helps by doing that. It's not a weakness at all by just focusing on one side of the market. My pleasure. There's a couple more things we'll learn um, in 2012. Certain little sweet spots in the day, but we're going to close this session here, and hopefully you guys got something out of it, and hopefully we'll see something unfold today. I think we'll see a large range day. So I will close the recording here, and I wish you good luck and good trading.